Good afternoon, everyone. My name is Angel Velez. I'm here with Cecilia Ramos, and today our focus is going to be on the veterans, Cecilia. I'm really excited about this segment because we're going to specifically talk about the VA loan product, and we're going to go into not so much the detail, but an overview of what a VA loan and what it's all about. I've got here Cecilia Ramos with me. She's with Fulton Bank, and so she will be the subject matter expert. And I've used a few veteran loans myself, and so I'm very familiar with the veteran loans, and I always tell people that the veteran loans is not the exact product that you should always consider, but it's one of the 3 or 4 products that are out there. As always, you do comparables to make sure that that's the product that fits you the best. So the first question I want to ask you, Cecilia, exactly what is a VA loan?
That's a great question. Thank you so much for having me, Angel. Thank you for your service.
Thank you so much.
Thank you, all veterans, again, for your service and active duty men. Again, I'm CC Ramos with Fulton Mortgage, Fulton Bank, and MLSR number 96205. I have to say that. The VA loan, basically, the VA mortgage is 100% zero down payment mortgage, and it is backed up by the Department of Veterans Affairs.
Okay.
Someone that's active duty and have served a certain amount of years, up from 90 days up until current, to someone that is basically has left the military and is considered a veteran, is entitled to get that mortgage.
So, as anyone who has served, it's not someone that retired, but someone who has served in the military. So you can get the more specific details if you qualify, if you feel like you qualify. So it's the veteran loan. All right, so the question really is that the fees. What are the fees associated with a veteran loan?
That's another great question. Outside of the one good thing, again, if you qualify for 100%, that means we're looking at your fees, meaning closing costs. One thing that's one of the biggest part of closing costs is what we call the funding fee. That's financed into your mortgage. The VA funding fee is again.
Hold on, that's a really important point. Get what she said. A fee can be financed into your mortgage. So if you are getting a loan, let's just say for $100,000, and the fee is 20 or 2.3%, which is the current fee for a VA mortgage loan, a funding fee, that's $2,300. So your loan gross would be $2,300. So that's $2,300. So for every $100,000, just multiply by 2.3%, and that's going to be what your total loan amount is going to be. I'm sorry, go ahead.
No, that's a really good point. So out of all of your costs, that is the only part of your cost that you can finance into a VA.
Okay.
Other mortgages don't have that, right? So consider the VA funding fee as like an insurance that the government charges to protect that loan. The rest of your costs are going to be your standard fees, such as title work. There are some fees that actually vets don't pay. It's about 3 or 4 fees. And under every lending institution and title company, they're going to try to set those fees to where they're not losing in a way.
Okay.
But there are some things that are going to come off your HUD. But on an average, your average cost for VA can run anywhere between, $5,500, depending on the rate you select, as much as $9,000 or $10,000. However, VA does have an APR test.
And what's APR stand for?
Good question. It stands for annual percentage rate,
Okay.
and that means we're taking your closing costs and express it in the form of a rate.
Okay.
So if your costs are, let's just say, $9,000 on a $200,000 loan, that means you're paying almost 3%. So if the fees are too excessive, meaning because I'm charging the buyer points to get a lower rate, VA will say, hey, these costs are too much.
Okay.
One other thing I've had recently happen, VA is going to cap the amount of costs you can pay too.
Okay.
Which is great. So I had a seller ask one of my buyers to pay $3,000 of their costs. VA won't allow that. So the good news is that your costs are not going to be that expensive.
Excellent. I want to go to qualifications. Now, we're not talking about qualifying for the loan. We already covered that area. But I do want to talk about qualifications when it comes to credit scores. A lot of people think that a VA loan, it's 100%. This is excellent. And then they go back and say, well, guess what? You still have to have a decent credit score. So what are some of the qualifications for a veteran?
That's an awesome question. The good thing about the Department of Veterans Affairs is that under this loan, technically there is not a minimum credit score requirement. Okay. However, depending on the lender, in order for the lender or the mortgage company to lend, we might set the threshold based on the risk we're willing to take. The average bank may say, hey, we want a 620 score, and you may have a mortgage company that says, we'll accept a 550. How about if your client doesn't have any active credit, meaning but they pay their light bill, rent bill, water bill, car insurance bill, you can also qualify for a VA mortgage. So it all depends on the lender that you're working with. you want to understand, hey, if I apply for a VA mortgage, what are your qualifications?
Okay.
What are your minimum scores? But the good news, it's a loan that's it's not as conservative, it's not as conservative as other loans are. So it gives us a lot of freeway up to go up to 60% debt to income,
Okay.
which is huge.
And what about credit scores?
Credit score, as I mentioned, there is an actual minimum threshold. Fulton, we require 620.
Okay.
But a buyer can purchase a home under the VA without credit scores, or credit scores as low as, what I've heard, as low as 500.
What
So
if there's an
depends on-
advertised credit score I've seen as low as, get a VA loan as low as 580 credit score, 560 credit score. Are the fees are going to be higher for that type of loan with that particular lender?
Awesome question again. So interest rates, no matter where you go, guys, that's why they say having a better credit, does it get you better scores? Absolutely. So when a lender steps in and says, hey, we're going to do loans for VA, they have a pricing engine based on that credit. So yes, scores, if you have a lesser score, you are going to have a higher rate and probably higher fees. However, there's still a threshold that a lender can charge.
Excellent. So one question as far as employment.
Mm-hmm.
What if a veteran is being discharged from the military or
Uh-huh.
ready finished with the military
Mhm.
and is on his way out of the service?
Yes.
What happens with the job? So let's talk about
History.
that because we've
Mhm.
had it where the veteran's getting out, he clamps on a veteran loan, VA loan, and he doesn't have a follow-on job. And so I think that's impactful, but I'll let Cecilia cover that. What happens with that?
Amazing question. So VA just look at the 2-year work history. Someone that leaves and retires from the military and goes immediately into the same line of work that we're in, that's great because that shows continuity of employment, meaning they stay in the same line of work. We've had some instance where the buyer has retired or left the military and had a few jobs and don't have a 2-year consistent work history. That's a big gotcha for VA. We have to demonstrate why didn't this person have a 2-year work history that wasn't in the same line of work from when they left the military. So yes, they still look at the 2-year work history very closely. Or let's just say you got out of the military, went to school, and then you find a job within that line of work. They'll accept that because hey, I wasn't working, but I was in school trying to graduate. So they do look at the 2-year continuity. And I'm hoping that if you do leave the military and you go into a line of work that lines up with what you did before, definitely helps you to be entitled to a VA mortgage.
What about that veteran that says, I'm going to get out, I'm
Uh-huh.
going to take some time for myself,
Mhm.
and don't immediately are in the job market? Can that disqualify them from getting a VA loan?
If you had an employment gap for more than 6 months and you don't get back into the same line of work, whether if it's from the VA or the job you just left, then you have to be with that new job for at least 6 months. Again, then we have to explain why did you have a gap of income within those 2 years.
Okay.
So we have to show everything is about compensating, mitigating factors on why they're going to give you this loan. So we have to present those. Either you were in school or you could have been saying, hey, I stayed at home because my wife was in college to become a doctor, right? That's a positive mitigating factor. There are a lot of stay-at-home dads or moms, right?
Right.
And then you're going back into the field on a salary job. Then we can say, well, we don't need the 6 month worth of history, right? Because we could tell why you stayed at home.
A couple more questions regarding financing and job. What happens with a veteran that's got a disability of any type? Number one, I know the funding fee is waived. However, can that person use the VA pension if they retired and the VA disability pension that they're getting, the disability income,
To
to
qualify?
qualify?
That's an amazing question. The good news about the United States is that we can discriminate against someone who try to buy a home based on the source of income. Here's the positive note of that. This is a fixed income that's going to come in for the rest of their life. So that for a bank or for VA, that's a good compensating factor.
Okay.
Now the question is, does that income support the dollar amount that they want? Okay. If they are disabled at a 10% or greater, the VA funding fee is waived, so that reduces what they're financing.
Excellent. And they can use that income to qualify.
Absolutely. And if it's non-taxable, the good news about non-taxable income such as SSI or disability, we can gross it up by 125%, 120%. So the client can help them boost and qualify for a little bit more house.
Now, there are a lot of lenders out there that do provide VA loans. USAA is a great bank. A lot of the credit unions, Veterans United, it's excellent. So when you're looking at those kinds of loans, always do your research and your homework, and we'll let you know that whatever differentiates the lenders from the others, it doesn't really matter. That's all right that we're a little bit over, because I do want to ask you one last question for full feedback. What differentiates you guys from any other lenders with the VA loan?
I love it. The fact that we have the lower score requirement, the fact that we can go up to a higher debt to income. If DU accepts a ratio of 55-60%, we'll go with it. We also have partnered up with Virginia Housing. So if there's a veteran that's a first-time home buyer or hasn't owned the house in 3 years and their debt to income is not exceeding 45%, guess what we have? A 2% closing cost assistance. So if you have someone buying a house, a $200,000 house, we're going to give them right out the gate $4,000 just because of that.
Oh,
so that's one of the unique products that we offer under the VA mortgage. So there is some closing cost assistance opportunity on a state level, and we also have closing cost assistance for lower to moderate income areas.
Yeah. As always, do your homework. Don't assume that the VA loan is the best product for you. It's a powerful product for you. Use the benefit because you've earned it. However, have your lender, whomever you're going to use, to run the numbers for you on a conventional loan, on an FHA loan, on a VA loan, if it's a USDA loan, any type of loans. It's all about those numbers. And we really appreciate if you're a veteran or know a veteran, please share our video, like our video, send it all around so people can get to know the products and understand the buying process. We're always here to help you. Love us, share us, and it's really our pleasure to teach you guys. Cecilia, thank you so much for being with me, and I appreciate your time, folks. Thank you so much.